Well, we're going to start today with the first thing, which is that a pre-approval is not enough. So this article is coming from Realtor.com, and you supplied this one, and it's actually from the front lines, if you will. So even though we're going to reference some stuff in the article, this is kind of your everyday lived experience.
Yeah, and it's been something that I think on these last couple of weeks has just been ramping up, and I've been really pushing it on the buyers, people that I've been having conversations about buying or even just in general selling or refinancing. And what I've learned is that right now more than ever is the time to start seeing where you're at. Get prepared. And, the article says it's not enough. It sounds like it's just not enough, right? But that's just one of the pieces that goes along with the whole pie. And getting ready right now just puts you in a position to have the opportunities to move quickly in certain situations. And right now, I think that's the biggest key that we need to drive, positioning yourself for the right time, because, we've been seeing deals come up. As soon as they come up, they leave. So you have to be just positioned ready.
So one of the things I want to compliment you and Will on, and maybe even myself in a weird way, is there's two things right out the gate in this that we've talked about. Yeah. One is their comment, and the second thing is a quote. So I'm gonna read the comment and I'll state it, and then I'm gonna read the quote from the person I interviewed here. So the article says this: in the market, prospective buyers must move quickly for their offer to be considered.
Yeah.
Dude, we literally talked about that in the last episode. Mm-hmm. We've also talked about that ad nauseum in all of 2025, kind of either directly or indirectly in terms of hey, be prepared, get ready, have your stuff ready, because you got to strike when the iron's hot, all these languages. And then here's the second thing, and I'm going to read this verbatim from the article. Quote from Brian Davis of Springfield, Missouri. Quote, my real estate agent set me up for success by making sure I got a fully underwritten pre-approval before I even started looking at houses. I had all my bank records and pay stubs in order. I made sure my credit was good beforehand. I was always 5 steps ahead just to make sure I was ready. When the right house finally came along, my bid got accepted.
I'm so glad you brought that up.
Haven't we been saying this?
I'm so glad you brought that up.
And they have this real example of this guy they used for the article. I'm like, dude, when people are like, oh, you guys are just selling homes and you're just schlepping loans, it's like, okay, well, Brian Davis bought a house.
Yeah.
So congratulations, Brian Davis. Shout out to Brian Davis.
They asked me earlier, hey, can you give us a little temperature of how the market is doing? And I told them people are still buying houses.
Yeah.
So 100%. It's still moving. People are still transacting. But I'm really glad you brought that up, and the way that you that they put it in the article is so vital, because of the fact that right now more than ever it's so important to have the pre-approval pre-underwritten. And what that means is that you're sending it to the bank. The bank is taking a look at your credit, your finances, your income, and saying, okay, we already know what that looks like. Buyer guidelines, it's cleared. Now you can go find the house and know that the financing is 100% secured. Now, the advantages this gives you is that once you submit an offer, you could say, hey, I'm fully underwritten on my buyer's conditions, meaning that there is going to be minimal to no conditions on what the bank asks as far as buyer requirements. Now we're all just focused on the property. Make sure the appraisal comes in at value. Make sure that the inspection is good and there's nothing wrong with the bones of the property. And lastly, that, there isn't anything drastically impeding you from moving into the house. I think that right there is going to give you the best chances of getting into the property that you really like if other people are looking at it as well.
So here's what I'm going to say to that. You're up against this dude.
The thing you're up against a Brian.
Yeah, the thing that you're describing as a loan officer to, how you're helping clients do that and you're successfully getting people in homes. It's like we're making Brian Davis's here, but then that's who you're competing with out in the market. If you're in the market and you're let's say behind Brian Davis and what he's done and what he's quoted as saying here, that's who your competition is. Your competition isn't just a calculator and your approval and your affordability qualifications and the underwriting. You're up against another dude who's ready to go and stomping at the ground, ready for that gate to fly open, and he's just off to the races. So just be aware of that. This is a real thing.
And I actually have a perfect example of a client that we literally went through this just I want to say in February. They're still quote unquote window shopping, but they're not in a hurry to move. They have the funds to move quickly. And their thing is that we have a very, very detailed needs list. And once we find what we need, we're definitely going to make a move on it. And I told them that's perfectly exactly why you need to get pre-approved and then underwritten already. Because now, as soon as they find the property, they don't have to do any of the financial work. They have to just literally submit the offer and get it accepted. Minimal conditions, very easy on the negotiations, and they can move a lot quicker than somebody else that has to get approved before they even submit the offer. And what we've realized when that happens is that as soon as you go and do the pre-approval and want to submit on an offer, the house is already flooded with other offers and maybe already in contract by the time that you're getting your pre-approval. So do yourself a service and not a disservice by, getting ready now so that when you want to submit the offer, you don't have to work backwards.
So I want you to tell everybody what happens if you're submitting offers. Let's say you're submitting a buyer's offer to a listing agent. It's going to present to their sellers, and all the other buyers have a underwritten approval, and you don't. What do they do with your offer?
Oh, they won't even look at it. They won't even look at it. And I'm being very dead honest because they will ask, let me see the pre-approval. Can I see the proof of funds? And if you don't have those, good luck. They'll accept the offer, but good luck even it making it to the table where they actually see it.
And the other thing that may not be true in all places you're seeing this show, but it's true for us here locally, is you might end up having to do what's called a cross-qualification.
Yes.
Where even though you're approved with us, you're going to send your approval with the proof of documentation of that approval to the other side, and they're going to cross-qualify you to basically vet that you're telling the truth and that all the numbers are stacking up in the way that you were presenting them. Now, we're also on the other side of that too. Sometimes we're the cross-qualifiers, and we're asking people for their loan approval, their underwriting approval, their DU approval for short, and we're saying, send me your DU, send me all your documentation, and we're going to vet for our listing agent that is on our camp that your offer is legit too. So you have to be ready for this. This is, again, I know I'm localizing this. Yeah. It just happens a lot here in San Diego. I know that in other parts of the country that may not be a common practice, but if you're here in San Diego, and I'd say even just California, you've got to get ready for a cross-qual.
So you break up a great point. I'm glad you said that. So for sellers, the advantage of having a cross-qualification when you're selling your house is that you're able to know if the buyer is actually ready to buy the house, he's actually approved, and they're actually going to pull forward with a deal. Now, what we've seen, and unfortunately it sucks, is somebody will submit an offer, say they're approved, when they're really just pre-qualified. No income has been verified, no credit has been ran, and you're really just going on based off like, hey, this is what I more or less, what I'm working with. Now, if you're on that boat, good luck. You're literally walking on eggshells because it's going to be very, very bad times when they say, hey, your offer's not accepted, the bank's not even qualifying you. Like, what are you doing here?
There's two things I see that commonly happen when you submit an offer that is not does not have a DU attached to it and a full loan approval. First, it's either going to get to the bottom of the stack, and if it doesn't make the bottom of the stack, it doesn't make the stack at all. And so those are kind of the two expected outcomes you should prepare yourself for if you stop short of getting the full loan approval. And that's kind of like my ceiling point on this. But there's another. I have a tactic I want to share.
Yeah.
Not a tactic. It's kind of a
strategy.
Yeah. It's a strategy. It's more of a safeguard. I'm gonna call it a safeguard, and this is why. I know in certain parts of the country where maybe insurance is either going really high or it's getting more difficult to get at an economic cost. Some people are waiving their insurance contingencies on their offer.
Yes, I've seen that.
Please do not do that. The mortgage company is still going to require you to have insurance if you're getting a loan on the purchase. So you're going to end up at an impasse if you waive your contingency on that, and then you actually are unable to get your insurance written to close the deal. You're going to be out some money. Or I'm saying your whole EMD, maybe part of your earnest money deposit, or maybe the whole earnest money deposit if you fail to close. So just heed the warning.
Yeah, no, definitely. And one of the strategies right now that we're implementing, and in real estate, everything's negotiable but not guaranteed. You got to get creative. You got to understand the seller's motivation. So if you know that you're buying in an area where insurance is going to be relatively very expensive compared to other areas, you maybe want to negotiate, one of your tactics and say, hey, I want to buy the house, but, help give me credits to pay my insurance. And that's one of the negotiations that we're in right now, where the buyer wants to buy the property. They just did a price reduction because the prior buyer couldn't get approved because of the insurance. So the turnaround there is like, okay, that's another 150 to 250, where in reality, we're used to seeing 100 or below. Now, where we found leverage is the seller needs to move quickly. They're offering credits, and we saw the opportunity. Well, if insurance is going to be an issue, we pulled the quote. It was around $350, not going to lie. Now we said, okay, well, instead of passing up on the property, why don't we ask for a credit to either get some of that paid down or all of it paid down? And you'd be surprised how sellers right now are willing to play ball because they got to offload their properties as well.
And I almost think that might even be like a domino effect because especially if that seller's, getting rid of this property and it's their primary and they're about to go buy another one, they might do that same tactic. Like so on the strategic side, like you're saying, like I'm saying it's a safeguard. Hey, don't remove your insurance contingency.
No,
but in the
don't at all.
tactic side, like you're saying, use that as a way to maybe negotiate some seller closing costs or at least a credit for it or something.
Yeah.
And that seller might also on the buy side end up being in that same boat.
100%.
So I think it's a maybe even because it's one of those common denominators where it's a problem for everyone in the market right now.
Yeah.
It's not like someone's having a problem with insurance and someone else isn't.
No.
It's like kind of
It's pretty understandable.
Everyone's
right
having some level of insurance problem. Maybe it's a little or maybe it's a lot, but I don't know anybody right now that's having zero insurance problem.
No, compared to previous years before we got into this whole fiasco with insurance is just being bonkers, nobody asked, is insurance good? Now you get prompted like, yo, is insurance going to go through? Can you insure the property? Like that's almost as important as like buyer's conditions or, hey, are they approved really?
But so you're right. A couple of years ago, maybe a lot in the Wayback Machine, because I'm an old guy. Yes, like we would almost you'd be laughed at if you were like, yeah, insurance might kill the deal. Like, wait, what are you talking about? Like, you can get a declaration page in an hour.
Yeah.
What do you mean? Nowadays, that is not the
depending on where you go.
That is not the case, man. That is not the case. So, anyways, I just wanted to share that as we're talking about, we're talking about this. Honestly, I'm gonna close with this part with this guy Brian Davis, man. Congratulations to you. I'm super impressed with your ferocity in wanting to get ready and be like competitive even against other people in the buyer's market who are trying to buy homes, because this is honestly, I think, who everyone's up against. Because even if you aren't actually up against a guy like this, pretend that you are, and you're going to be just that much more prepared.
Yeah, and for me, just to close it out as well, is, if you're looking to make a move right now in 2025, it starts, 3, 6, 9 months out because of the fact that you can be in the market for more than you expect. So if you have more time, you're going to have a lot more experience, you're going to have a lot more reps, and you're going to have a better positioning of how you can negotiate to get a deal that favors you.
Yeah. Good job, Brian.